Hi, I'm Jonathan Wild, and we are going to cover how to determine the cost of plant assets, also known as property, plant, and equipment, or fixed assets. Plant assets are physical or tangible assets used in operations, and they also have a useful life of more than one accounting period. To determine the cost of plant assets, let's look at some specific examples. Machinery and equipment include the cost to purchase the equipment and prepare it for its intended use. This can include the price of the equipment and any taxes or shipping costs. It can also include insurance while in transit and the installing, assembling, and initial testing of the equipment. A building consists of the costs of acquiring or building a building. An acquired building's costs include the price of the building and any associated taxes, title, or lawyer fees. It can also include any needed repairs or remodeling to make it ready for use. Now, when a building is constructed, its costs are obviously different. They include materials, labor, and indirect overhead costs, which are things like energy costs during construction. Building costs also include design and permit costs, and insurance during construction. But insurance on the building after it is being used is recorded as an operating expense. Land improvements are things such as parking lots, driveways, sidewalks, fences, and outdoor lighting. Their costs include those improvements necessary to make it ready for their intended use. The last category I want to discuss is land. Land literally refers to the Earth's surface, and in accounting is said to have an indefinite or unlimited life. Land costs include the purchase price of the land and any associated real estate or title fees. It can also include any costs from surveying or clearing the land. Let's run through an example. Assume a company paid $500,000 cash to acquire land. The land had an old building on it that was removed at a cost of $50,000. Additional closing fees totaled $20,000. To determine the cost of the land, we take the $500,000 cash price of the land, add the net cost of building removal, and the closing costs, and this gets us $570,000 for the total cost of the land. To record the journal entry for this purchase of land, we debit land for $570,000 and credit cash for $570,000.